Hello everyone, Ugudre here, and this is my money brief. Wow, so today's money brief is hot, like hot. So the central bank governor and the members of his monetary policy committee met today. Well, they met yesterday and then today as well. And if you haven't been watching or following the news, the central bank governor just reeled out what I call like one of the most boldest, I can use that word, boldest MPC or monetary policy communique that I've ever seen. Like, I've been reading monetary policy communiques for years, and I've been watching it being delivered by several central bank governors. But today's own was just bold. Like, it was bold way out of the blocks, and I mean, I wasn't expecting that from Yemi Cardoso, but man, I think that he just delivered what I would call one of the frankest, most candid, speech or monetary policy communique that I've seen. And even doing his responses, he was just basically candid and quite bold. So what have they basically decided in a nutshell? So the central bank has said, look, they're going to raise MPR by 50 basis points to 27.25%. So if you're wondering what that means, interest rates will continue to go up. Yeah, so he's saying that contrary to expectations, because everybody expected interest rates, to maybe go down, maybe the central bank will reduce interest rates or maybe keep it flat. I actually thought, perhaps maybe they would keep it flat. I didn't think they would take it down, but I thought they would leave it where it was. But contrary to everyone, like, they've just shocked the whole world. Like, the Diabetrics article popped recently, just a few minutes ago. It was clear that, they were on a different tangent. Now, bear in mind that globally, most central banks across the world has been cutting rates. But you need to understand that they have their own reasons why they are cutting rates. And the reasons why they are cutting rates, it's usually not the same reason why we should also cut rates, which is what really made Cardoso's speech today quite poignant for me, because I think that sort of displayed a clear understanding of the issues at hand, and there is no need to be carried away at all, right? So he decided to raise rates, and then of course also raise a number of things as well. Even CRR was raised as well to, I think, by 5% or something like that, to 50%, and that was crazy as well, because now they are even tightening further on the banking side. CRR is cash reserve requirement. So the CBN is going to sterilize a lot more money from banks than it's currently doing. So before I get to what this really means for all of us, right, let me try and explain why the CBN took this action. Because, I mean, I've seen a lot of people commenting on social media and saying, man, why are they raising rates when everybody's reducing rates and blah, 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 blah. It's not a monetary problem. Yeah, I mean, we all got points. I agree, right? But let's take a chill pill and try and understand, or at least understand why they are doing what they did. Okay, so the first reason, and we try to summarize it as well in a Metrics article, but I'll try and sort of break it down for you. The first reason here was persistent core inflation. Okay, so Cardoso says, look, we agree, we know, we've seen the MBS data that inflation dropped. Okay, it eased to 32.15% in August from 33.4%. Small easing, but albeit the first time is eased in months, okay, which is quite good. And that was also due to food inflation. But at the same time, he also mentioned that core inflation, which is the inflation numbers that I actually like to watch, because core inflation strips out volatile things like food and all that, and just focuses on what we all know, which is like the real inflation stuff. So core inflation did rise from 27.47 to 27.58%. And to him, that suggests, look, we're not out of the woods. Inflation is still a problem. And ask yourself, have prices of goods and services actually reduced where you are? No. Forget about what NBC is saying. Things are still pretty much elevated, expensive. And let's remember that fuel prices just went up. So the inflation for the recent increase in fuel prices hasn't even reflected yet. That is likely going to reflect when the September numbers are out in October, and you would even see it more when the October numbers are out in November. And so pretty interesting that the central bank acknowledges that, and they don't want to be carried away. And so he says core inflation has remained elevated, driven primarily by rising energy prices. So rising energy prices is fuel, right? And so it's pretty clear that he knows that there's inflation coming. There's still more. We're not out of that inflation wood. And so the only way central banks know how to fight inflation is by increasing interest rates. And so that's why they are increasing interest rates. So for a lot of people who are saying, oh, look, why is the CBN increasing interest rate? Well, this is why they have to increase interest rate, because you cannot be fighting inflation the way CBN knows how to fight inflation by not raising rates. Now, the second reason they gave is they want to manage excess liquidity, right? And foreign exchange demand. Very important point there. Now, managing excess liquidity is basically trying to reduce money supply. Remember, we've always said that there's over 100 trillion out there. There's a lot of money in circulation in Nigeria at the moment. Well, money supply, basically. And you can always see this from anytime they want to do treasury bills. Like, it's always oversubscribed. Even bonds, mostly oversubscribed. So there's still a lot of money out there chasing dollars. And so you cannot want to sterilize that money or get that money out of circulation by keeping interest rates low or by signaling that you want to start reducing rates. No, you have to be aggressive to reduce those rates. So a lot of people, I know things are very difficult, but the data suggests that there's a lot of cash still out there. And so that cash needs to be mopped off the economy so that most of it doesn't go towards exchange rate. And so he says that policy has been working for them, and they think that's why they've sort of have some kind of exchange rate stability. And you cannot sort of torpedo that policy now by raising rates. And so they're trying to manage excess liquidity. And the only way you can manage excess liquidity is to keep interest rates still elevated, right? So interest rate on fixed income securities should continue to go up. Now, the third reason he said was to stabilize exchange rate and enhance, investor confidence. So again, foreign investors are also looking and saying, okay, let's even see what these Nigerians are doing. And let's see how stable their exchange rate is over the short to medium term. So if you keep interest rates at this sort of level that are high, I know it comes with a lot of pain, but at least you're signaling that can, to a large extent, keep your exchange rate stable. Now, guys, when interest rates are high, exchange rate tends to be stable. When you lower interest rate, you see massive volatility. That's when you start to see exchange rate start to go to 1.8, 1.9. It happens like that. That's just how these things work. And of course, there's an inflation ring to it, but I don't want to go into that. That's just going too technical. But the point is, with interest rate going down, you would likely see higher volatility. And so it's better for them to keep interest rate high so that you can maintain that exchange rate stability. And that goes to the previous point of by keeping interest rates high, you're mopping Naira off the system. And the more Naira you mop off the system, the less Naira is available to buy dollars. That's just what it means. And so that's the third major reason why they decided to raise interest rate. Now, the fourth one is even more interesting for me, and that's even the one that I actually like, because I'm like, okay, now somebody's really thinking these things through. He says they also need to maintain positive real interest rate to attract investors. Exactly. Think about it. Inflation is what? 2.15%, right? As at August. But CBN's interest rate is 27.25%. So which means that we're still negative, because if you minus 32 from 27, maybe like 5% or thereabout. So we're still negative in terms of real interest rates. So what it means technically is that your MPR should typically be higher than your inflation rate, because then it's positive. But when your MPR is lower than your inflation rate, then it's negative real interest. So we're not even, his point is that we're not even aggressive enough. And foreign investors are going to look at you like, why should I bring my money into your country when you're giving me negative real return? Think about it. your inflation rate is 32%, your interest rate is 27%. So I'm still even losing net. I might as well just keep the money in the US where inflation rate is lower than the US interest rate. You see? So, and that's what's happening globally, because globally their interest rate is higher than their inflation rate. So it's okay for them to start to cut. But that's not the case in Nigeria. And like I said, it's likely that interest rate will keep going up. So how do you start to cut rates? You can't cut rates. You can't. So because you still have negative rates. And if you have negative real return, investors are not going to want to bring money in here. And that's the point he makes. Now, the final point that he makes that I really also like, and I think this was one of the boldest one that he did make, and I'm like, geez, man, this guy is not, pulling punches at all. And he said that he's worried about fiscal deficit. Guys, I've always talked about fiscal deficit. I've said, so long as Nigeria continues to have high fiscal deficits, you would always have exchange rate pressures. So fiscal deficit essentially is when government expenditure is more than its income. And that has been like that for Nigeria for over a decade or more. So he's saying that remains a problem that needs to be fixed. And he acknowledges that, yes, the government seems to be working on it now, but it's still a huge problem for him. And so it's a problem for him and the central bank, because you can't be fighting inflation and exchange rate stability when the fiscal side is just still spending, in some cases recklessly, or in some cases maybe because they think they need to spend, right? So it's difficult for him to manage those two things, and that's what he's saying. And then more important, he now also says that what people have always rumored in economic circles is that anytime that the government releases FAC, the exchange rate weakens. Should I repeat that? Anytime FAC is Federal, Allocation Committee or whatever. That's when state and federal governments share money. Okay, so the Federal Account and Allocation Committee meet once every month or something, and they agree on proceeds from oil and all that and taxes, and then they share it to states and local governments and all that. So he says anytime that they share money, the exchange rate weakens. Why? Is it that politicians just carry the money and go and buy dollars? And so he's saying that needs to be sorted out too, because that is a huge problem for them. And so long as this problem remains, well, they don't see how they're going to reduce rates. It's a huge concern for them. So they can't reduce interest rates. So in a nutshell, that's the 5 reasons why the central bank says they are not going to reduce interest rate. And contrary to everyone's expectation, they increased it by 0.5%, and it was unanimous. Incredible. One of the best central bank, the boldest that I've seen in recent times. And so what it means for you guys at the end of the day is, look, now that interest is high, again, your loans are going to get higher. So for those who have bank loans, personal loans, or companies who have loans, your bank is going to write you again this week and tell you that they are raising rates. It's just what they do. So they will write. And then if you are the one that has fixed deposit in the bank, you better ask your bank that you want higher rates too, because that's what it is now. But that's also a problem too, because it appears that there's too much money out there anyway. So even banks are saying, oh, your deposit, CBN is even taking 50% of it. Why do I even need to give you extra interest rates? So you can see that it's a bit of a quagmire as well. But the message here is that this is not the time to borrow. This economy, don't borrow. That's what the bank is saying. That's what the central bank is saying. We don't need more borrowing. I don't like that aspect of it. I think it affects economic output. And so long as we have that, economic growth will stagnate. I agree. Jobs will be affected. But, this is a different fight that the CBN is fighting. So CBN is fighting inflation fight. And inflation fight sometimes requires a different kind of warfare, or battle, armory, different from, when you're trying to fight GDP and growth. And so that's it. I'm sorry, guys, this took longer than expected, but that essentially is my summary of today's MPR, MPC meeting. There's so many other nuggets and so many other things that also went on that I'll probably talk about in a few other videos that I'll make out of this MPC meeting. But this has been the most interesting one for me, and I hope that I've been able to sort of break these things down. And If there are other things you want me to